Die Stummschaltung ist aufgehoben.
Good morning, traders. I hope you're having a great start into a new week. I'm hoping that. Let me double check that you can see the screens. Yes, you can. All right. So let's get going. Headlines overnight. Risk, a little bit of a mixed picture. Of course, U.S. equities in the overnight session to all new time highs. Asian equities followed suit. Everything across the board was green. Only tiny little bit of concern was the yen gaining some strength, which of course is always a question to be asked. Why is money flowing into the Japanese yen? So as I'm alluding to here, we had the Australian index up 40 basis points, Nikkei up almost 8%, Hang Seng over 2%, and Shanghai over 1.4. Just before I started, I saw that the Chinese yuan ends the onshore trading session at 6.8171 per dollar, and that is the strongest close since August 1, which naturally will also be positive for the Australian dollar. The Dixie holding above 95 at the moment, and as Jens already said, today is UK bank holiday, so expect less liquidity and be extra careful in case you will trade today. UK and EU reported a pushback in terms of their agreement deadline in terms of the Brexit by 4 weeks to mid-November, and they're calling it a hard deadline then and now. I'm still very eager to see what kind of deal we will actually get out of it. We had numbers this morning, only really relevant ones were the IFO Business Climate Index, and it beat. It beat expectations, came in really strong. We are seeing some of the mixed mandates and funds adjusting flows this morning, and flows are going into the euro. As it currently stands. So it's the 27th today. The entire rest of the week, especially when the British guys are back tomorrow, will be under the influence of month-end flows and adjustments. So be very careful. Some of your, let's say, technical systems may not work at all because month-end is much more important. The IFO actually said that the current data signals that German third quarter growth may come in at 0.5. If it cools down in the fourth quarter as well, third and fourth quarter, then it's going to be difficult to reach the expected growth rate on an annual basis. So that's not that good. Dollar renminbi already alluded to it earlier when I started preparing the slides for you guys this morning. We stood at 6.8116, so we closed even better than that level. Good. Our trade from last week, short euro Canadian dollar, was a disaster. A loss, so we lost the percent on that one. It completely came in the opposite. The euro found a base just like the pound, just like the Aussie dollar, and we were on the wrong side. What can I say? It is what it is. It's difficult on a Monday morning. So you carry on. That's why we do risk management. Risk management is protecting our capital. Money management is more like profit management, means that if you are in an uptrend like this, you actually want to go ahead and add to your winning positions. That's very important, that you ride the winners to the max. That's how you actually end up making money. York, you're doing a great job in that. In gold, you sent me a trade last week where you added to your winning position. Tell me again, how much did you make? Not in dollar terms, but in percentage terms. How much did you make? I know you had a very good trading day that day in gold. So you made $1,520, risking, I think the margin is $500, right? So you did 3 times margin, but in terms of percentage, anyway, so he added to his winners, and that's what I'm teaching, and that's what I want you guys to hopefully start doing as well. All right, as I said, when I started the day, we saw some weakness in the antipodians and a little bit of strength in the yen, and then risk events for this week. The whole week is somewhat light and a little bit bearish for the US dollar. IFO beat, came in stronger than expected. Out of Japan, we have a little bit weaker CPI numbers on Tuesday, And then we have, as you can see, the goods trade balance coming in a little bit weaker. We have the Case-Shiller Composite House Price Index expected a little bit weaker. We have the Consumer Confidence Board coming in a little bit weaker, and the Richmond Manufacturing Index a little bit weaker. So expect some pre-positioning in terms of a weaker dollar from my colleagues back in the banks and on the fund side. Wednesday, new home sales in Australia. I'm eager to keep an eye on that. Why? Because the RBA keeps the housing market in focus. Then consumer confidence in line basically, but I do keep an eye on consumer confidence because once that falls off in a late cycle, business cycle, late cycle, that is a severe indication that we're heading for trouble. Then we have GfK consumer climate in Europe. That's expected to come in line. French consumer spending, I'm keeping an eye on a little bit more, a little bit better expected here. Why? It's the second largest economy in the EU, considering a Brexit, right? And then preliminary GDP expected with 20 basis points in terms of growth. Oops, what did I do here? I apologize. Okay. Current account for Canada. Andrea just told me that it's expected to come in better. That would be good, but the GDP growth in Canada is expected to come in a little bit weaker. So this here, though, on Wednesday is dollar GDP, US GDP, excuse me, and we explained that in one of our other Monday morning meetings. We front-loaded a lot of the business activities before negative tariffs would hit, and that explained the 4.1 last time. I am very eager to see if the 4.0 is really coming in or if it's going to come in a little bit lower. I am not surprised if it comes in a little bit lower. I am surprised if it beats again, and that would mean instantaneous US dollar strength. So that might be a good scalping opportunity if you have time to watch the numbers live. Then we have pending home sales. I have an eye on the overall housing market. It has cooled off significantly already in the States, all right? Consumer debt is going through the roof. Retail spending is going through the roof. You may have seen the numbers by some of the retail equity names in the US through the roof. Unbelievable. But look at credit card spending, and then you'll see that it was the tax cut that was spent in November by the US consumer and that they're riding it all on their credit card. Yet the bottom third of the US employed personnel is not very confident about the future. I'm going to show you a couple of slides on that in a second. That's not good. The US economy basically is made up roughly 70% of the US consumer. If the US consumer, i.e. the bottom third, do not feel hopeful about the future, and in terms of finding a new job, for those who make less than $50,000 a year, respondents to the last survey said that they are not hopeful to find a new job in case they would lose their job within 3 months. And that means they're cutting back on spending. What they are spending, they're spending on a credit card because their wage growth is not really there. So it's very, 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 very interesting to observe this. And do not be astonished if down the road we will run into a wall there if the consumer in the US stops spending. Okay, retail sales in Japan. It's not really that super relevant at the moment, but I was surprised and happy. I think we said it in the last meeting or 2 meetings prior that the yen has started to react to fundamental data once again. All right, then New Zealand ANZ business confidence. That is really horrible. If you click this in Forex Factory, you will see that we're really downward sloping. My hope is that the slide would stop and then some positive sentiment would return. In a few slides, we'll talk about the RBNZ and what Governor Orr said at Jackson Hole. Private capital expenditure, positive, but building approvals in Australia negative. So can't really make up my mind there. I need to watch this. And then also for you, let's say you have a daytime job, you come home at night and you are interested in the Australian dollar. then have a look at the chart, have a look at this in Forex Factory and see, hey, what number actually did come, what beat or missed, and how did the currency react to it. That is a learning effect then for you. Import prices, look at that. German import prices flat. Very astonishing because PPI across Europe is actually rising in the US as well. Some of that rise in PPI is passed on to the consumer. That means a rising CPI. If wage growth doesn't make up for that, and it doesn't, that means additional pressure on the consumer. So that's the logical thought behind why we're watching PPI and then CPI. So Germany, largest economy in the EU, that's why I'm watching that. All right, on we go. Spain, I'm just watching Spain. You know why? Because they have 6% of their GDP in terms of exposure to debt towards Turkey. And I hope that you all have it on the radar that Turkey is in trouble. So is Venezuela. So is actually, yesterday I spent a long time looking at all emerging market currencies. All Eastern European, South Africa, Africa in general, South America, Asian emerging markets. They're all underwater due to dollar strength. So when you hear on CNBC or some bullshit like that it's contained and isolated, it is not. It's all over the place. Emerging markets are getting hit severely. So if this dollar bull run continues, I expect an ETF like EEM to drop another 20 to 40%. Yeah, it's already dropped and it's going to continue to drop if the dollar strength continues. Mortgage approvals in the UK, keep an eye on because the Bank of England does as well. Net lending just tells us, is there credit growth or not? Yes, there is some expected. Credit growth means GDP expansion is positive. 10-year Italian yields. I'm watching it like a hawk. So am I on the 2-year. So am I on the CDS, the credit default swap for the sovereign debt. Italy's budget, October 15, presented to the to the EU, will be of utmost importance. Italian banks also exposure to non-performing loans. If you look at the Euro banking index, the Eurostoxx banking index, it is in the dumpster. It is super, super, super low. Spanish banks, BBVA, approaching all-time lows again. We have some severe problems there. So be careful if and when you think you're going to long the euro in the long term. It's a great recovery rally here, but fundamentally very difficult to be super positive because an economy, and I mean the European economy, can only really grow if the banking sector is healthy. And Rothschild Investment Banking was mandated to check if UniCredit and Societe Generale should merge. That is misery and company merging. That is horrible plus horrible doesn't make any good. Very interesting that this is happening right at this moment because the French have very high exposure, French banks, to Turkish banks as well. Interesting, right? Okay, GDP in Canada, Andrea said it's expected to come in a little bit weaker. That wouldn't be good. And then we have core PCE. Recall, I keep saying it, repetition makes perfect. Used to be the favorite inflation gauge for the Fed. Expected to tick up a little bit higher, but inflation not overshooting in the Fed's eyes for now, so we're all good. And I'm hurrying up. Consumer confidence, if it drops late cycle, we have a problem. Yen numbers a little bit better on Friday. Chinese PMIs expected to come in a little bit weaker. So Trump's trade war is hurting China. I said it last week, or let's say it's stinging China. Yeah. Plus their One Belt, One Road initiative is getting some headwinds from some of the participating emerging markets because they're not getting the credits that they want at the terms that they wanted. So China running into a little bit of a problem here. Problem is Trump is too aggressive. My mother did business in China for decades. It's a very, very different culture, extremely different. I don't know who of you have experience with dealing with Chinese. Not good to be that aggressive. They need to keep face and he's pinning the president Xi into a corner, and he shouldn't be doing that. He needs to find a different way of dealing with these guys if there is to be a solution. I don't see a solution currently. Aussie dollar private sector credit, same thing. Credit expansion positive, credit contraction negative. French preliminary CPI, interesting. There is some inflation popping up in France, so keep an eye on that. In euro, overall, no inflation, 2.1 expected to come in, same as last time. Italy CPI, okay, no inflation or less inflation in Italy. And then Chicago PMI, a little bit weaker. And last but not least, I think there was private sector credit out of Australia. Okay, some of these come in wrong. And then University of Michigan, revised. Revised, never as important as the actual. Central bank review. Here comes some interesting slides. Powell was speaking at Jackson Hole and in line with Fed guidance. That means gradual rate hikes are warranted if strong job growth and income growth continue. What did I try to explain early on? I don't see that strong income growth. No signs that inflation accelerates above 2%. The dollar reacted dovishly. Dovish means it came off. The dollar saw weakness. No mention at Jackson Hole of trade risks and Fed's independence. Independence, for those of you who don't understand or don't track, Trump was upset and tweeted that he wanted Powell to be more dovish. The central bank governor is put in place. He is approved by Congress, and his job is to do with his team central bank policy, monetary policy, independent of any political influence. So the Fed Powell's speech didn't even go into Trump tweeting negative on the Fed. Rate hike probabilities this morning for September, 96%. That's done and dusted. They're going to hike in September. It's going to be horrible for emerging market currencies. And then for December, 66.1% that there's another hike. Question is, will there be two more in 2019? US inflation, 2.9. So he says he sees inflation not above 2%. It is at 2.9. Okay. On the other hand, non-farm payrolls, as you can see, were coming off a little bit. So job growth, strong job growth, strong job growth and income growth. Well, where is income growth? Let's have a look here. Is there any income growth? Average hourly earnings. Well, if there was strong income growth, I would expect it to tick higher. And what about consumer sentiment? That is dropping off. Again, it's dropping off because the bottom third of employed people say we are screwed. We're not seeing income growth, yet we are seeing CPI. We are seeing and experiencing inflation. I have less money in my pocket. Not good. What I spent on a credit card. I didn't add those slides. Not good. Okay. Late cycle, you see one of the leading indicators, consumer confidence dropping off. I'm not saying that the equities are going to sell off right now, even though last week on 3 days in a row, I made money trading futures, selling top edges in the ES. All right. ECB minutes. No surprises there. Trade tensions suck. Upbeat on growth. We think the first half slowdown was temporary. Uncertainties around inflation are receding. So the ECB is super bullish. Unwinding of quant easing dependent on incoming data. They're data dependent. Market expectations for the next hike, end of 2019. Growth rate, coming off a little bit. All right, let's see, Mr. and Mrs. ECB, if you're right, that GDP growth is going to pick up in the second half. Inflation rate ticking higher. Higher inflation, less growth. Do you think that's positive? Have a think. Do you think it's positive that we have higher inflation but less growth? Okay. RBA minutes real quick. No new information. Trade wars suck. No urgency to tweak rates in the near term, although next move may be up. RBA forecasts nothing's going to happen in rates until 2020, and the focus will continue on a weakening housing market through 19, low inflation, low wage growth, and a global slowdown in growth. Global slowdown. If China slows down, the rest of the world will slow down. Then it's again, once more, all up to the US to pick up global growth. And they're not going to do it with a stronger dollar. The stronger the dollar gets, the worse it is for global growth. The dollar needs to be weakened. Aussie dollar GDP growth. Do you see any GDP growth here above 1%, 1.52? No. So why should they hike rates? What about inflation at 2.1? Okay, fine. That's why they say we need wage growth to pick up in order to hike. It's the same problem that you see with other jurisdictions as well. RBNZ kept rates last time at 175 and they were dovish. And then at Jackson Hole, Governor Orr was interviewed and he said, hey, we're in no hurry to lift rates, but we're not ruling out that we're going to cut rates next. Cut. Unbelievable. All right, so he was very pleased on how the currency was trading. So what I did for us is I give you a picture of the monthly where the New Zealand dollar is actually trading. The rates are expected to remain unchanged until late 19 by the market. The RBNZ themselves expect no rate change until 2020. So we are trading in a friggin' box. That's why he said he's happy, because we're in the middle of the middle of the middle of the middle. We're in fair value. The New Zealand dollars, there's no trade here at the moment, but inflation at 2.1, similar to Australia. So quite interesting how dovish Governor Orr was on his own currency. Very interesting. Difficult to long the New Zealand dollar under these circumstances. Very difficult. Rather play him out of the short. Positioning, volatility, commitment of traders. Aussie dollar on its way to a long signal. And Andrea, I'm sure you saw it, Thursday, long volatility signal. The vol market gave us a long signal, and this was Thursday. We hit into a liquidity area. We see accumulation. We have a long signal out of the volatility market. Boom, reaccumulation, boom. And expectation is, why did we not dip into this liquidity higher here? That's the strength. That's a sign of inherent weakness. It could have, should have. The market doesn't have to do anything, but it's very astonishing that we didn't hit a little bit higher into this former POC. Why did we stop right at the roll reversal? Not very strong. All right. Swissy, long bias, Kiwi on its way to a long signal. Unfortunately, we don't have any volatility help there because we don't see the option market. There are no options. Volatility, Euro, unchanged, a little bit lower. Pound, a little bit higher. Yen, a little bit lower. VIX, in line. But the VIX, and I'll show you later, is coming off. It's in complacency territory. So US equities at all-time highs, VIX at the lows. That is waiting for trouble. Option pricing, bullish on Monday, Aussie dollar long, Euro dollar long, okay? And bearish, nothing. It was out of the option pricing market, there was no bearish signal for the London session. Option flows, bullish, everything, Aussie, pound, cat, yen, gold. I even give you a level. I'm looking for 1209.50 to long gold. And bearish on Monday, London session, the Euro. Again, there are some pension fund adjustments going through the market right now where the market is trading bullish on the Euro. It's actually seeing some strength. And here we see the volatility. It's from my friend Kai, was one of my first senior traders back when I started, and he's doing some very good charts. And as you can see, volatility decreasing, complacency territory, I still expect it to pick up. Potential trade this week, long gold. Dollar, slightly weaker economic numbers expected for this week. Gold, CFTC caught positioning, extremely strong. Extremely strong, so I'm looking for a long signal. It's already taken off. Risk for the trade is better US numbers, a dollar bull re-emerging, and obviously if the renminbi devaluation gains momentum again. Have a last look at the chart. So we see the super powerful move up, the dovish reaction in the US dollar after Powell's speak at Jackson Hole. We see this roll reversal right here. I would love for the market to come back. We're trading in a box right now. It's a flag trade. If you do like technical analysis, take the measurement from here to here, add it to the breakout, and you'll get to these targets, target 1 and target 2. It looks like an accumulation within the flag. I'd like to have that square up down here and or back to the roll reversal, and then it's a good long. Only keep the dollar on the radar. If the dollar strengthens, this is not a long, okay? You need to keep both on the radar, please. Great. Don't know how many hours I spoke now, 28 minutes. I apologize. Let's look at some of the questions real quick. Yeah, we have a trader event with 50 of my traders on Saturday. I'm excited that you guys are coming. Great. Dollar index should go downwards technically 800 points for the long term upwards. Says Patricia. That'd be great, Patricia, if the dollar were to come off. Brazil, horrific. Did you look at the currency, York? It's also getting hit. Chris, you had internet problems. Not a problem. To the weekly 38.2 FIP retracement. Patricia, I like what you're doing. Excellent. With the dollar bull, can't help but thinking on selling dollar Swissy based on weekly chart. VT, you were the guy. You were the guy or the girl who was short New Zealand dollar, correct? So you're obviously already a good trader. Let's have a quick look at what were you looking at? Dollar Swissy. It's funny. I was looking at dollar Swissy potential short for this meeting as well. So you're on the right track here. I like it. I mean, not to say that I'm right. This is the one problem that I have. We did see some accumulation here in a low volume test. That is the one problem that I have. So we're really in a box currently, and colleagues of mine have accumulated long. Otherwise, you wouldn't see this reaction here. That was the reason why I held off shorting the dollar versus the Swissy. Yeah? If you want to short it, see what they're going to do with the liquidity above here, and see if they hit this liquidity, what they're going to do with that liquidity here. Okay? Trump helps the technicals. He does. Dollar needs a retracement, big one. All right, credit cards, M&A and V-shorten. Wouldn't short credit cards at all right now, because MasterCard and Visa are making a shitload of money based on the high U.S. consumer spending via credit card. Thank you, Jay. Brilliant. Okay. York already informed me that the long opportunity just hit in gold. Great analysis. Thank you, Darshan. I appreciate it. I'm always very, very worried that retail traders watching this get upset because we're spending so much time on fundamentals. And I know they want to see charts. And trust me, the problem is this is what retail traders do. And Jens, I'll stop in a second. All right. Retail traders do this. They spend so much of their time on technical analysis, and then the rest of it is money management, which is great because you're not trying to blow yourself up. That is great. But let's get this off and let's show you what we do at the bank, because it's the complete opposite of what we do. At the bank, we do, here we go, we do fundamental analysis. We look at leading markets. I call it inner market analysis. We look at the sentiment. So nothing is contained in terms of emerging market weakness. Nothing. And that gives us the opportunity to then look at the weakest countries, the highest exposure within the countries, the weakest banks, and we short the shit out of it, because that's how you make money, unfortunately. And then technicals. And technicals, of course, I'm using this MT4 thingy on a Monday morning meeting, but of course we don't use that. We trade futures. We're active in liquid markets where we can see the exact volume profile, where we can use volume spread analysis, and where we can see where we have withdrawal of liquidity, where cumulative delta indicates an institutional buyer or a seller. So it's really quite smart what we do, but it's technicals has nothing to do with chart formations. Nothing. We don't know any of that. By the way, statistically, they have been proven to not give you a statistical advantage. All right, I think we're done in terms of questions. Thank you, Patricia. Thank you, Patricia. Appreciate it. Thanks for you all coming in. Do not have enough info on its fundamentals, the correct interpretation. VT, that's true. That's why I'm doing this. I'm trying to help you guys a little bit. And if you it's just learning Chinese. I drop you off in China. In a year, you'll speak a little bit of Chinese, right? You just come here every Monday morning. You can ask questions and we'll get you there in time. Just keep showing up and you'll get more and more of it. Just trust me, we do not look at the charts. As a market maker in the bank, I'm always hedged. So if I were, for example, to trade this dollar versus Swissy, I would trade the interest rate curves and spreads as a hedge against it. It's called mean reversion. So what I do is I trade Forex versus interest rates. Yeah, I have access to both markets. Or month end, I trade equity indices versus Forex. Oh, I heard Jens. I need to stop. Sorry, Jens. Sorry. Guys,
time is our limit, but it was a great webinar. And we have a lot of fans because of that. Not too much technical analysis to the start of the week for a good preparing for the market or weekly outlook. It's great. And yeah, we have 5 days a week, 5 different traders with 5 different styles. So if you like other styles or just like to get to know other styles, visit us tomorrow again to the same time, 5 days a week, 5 different traders. And if you'd like to see that again, a couple of hours later, we'll be